egg prices have grown by 70%. Shocked? At this point, I am sure you are over it. I know you've been to the store lately and have seen how the grocery prices in general are insane. According to the Government Accountability Office, last year, U.S. consumers saw the largest annual increase in food prices since the 1980s. While food prices generally increased by about 2% in prior years, they increased about 11% from 2021 to 2022. People, this is what we call inflation. Many people dislike the IRS because many assume the IRS doesn't care because it takes so much of their hard-earned money. Furthermore, they believe that our tax system is not fair. Some claim that the rich become richer while the poor become poorer. I'm curious to know your thoughts on our tax system and whether you think the IRS generally cares about its taxpayers. Drop your comments below. All right, now the painful million-dollar question is, how in the world is your income going to compete with inflation if your job isn't giving you a raise every year? Well, the IRS feels your pain, and in order to accommodate inflation, they adjust the tax brackets each year. In fact, the IRS increased tax brackets by 7% for the 2023 tax year to account for record high inflation. What does this mean for you? It could mean that you may end up in a lower tax bracket than you were last year, which means paying less in taxes. For example, someone who is filing single and making $44,000 will see themselves going from a marginal tax rate of 22% in 2022 to 12% in 2023. Hi, I'm Sierra Stanberry, an accountant and tax strategist. In this video, I will explain what tax brackets are, how they work, and my thoughts on whether the government really cares about its taxpayers and if the tax system is unfair. Before I move on, don't forget to subscribe to my channel if you've enjoyed this video so far. You can subscribe by clicking the red button in the lower right-hand corner of this video or by clicking the subscribe button below. This is a new channel. Subscribing to my channel will help me understand that I am doing something right. I am working extremely hard to build this channel and create content that will help my viewers make smarter decisions today to build lasting wealth tomorrow. Once you subscribe, please comment in the comment section what number subscriber you are so that I can thank you. Not only that, when I get to the top, I'll remember who exactly was with me shooting in the gym. Let's get into it. Okay, so what are tax brackets? Tax brackets are brackets that will show you what portions of your income are taxed at a certain tax rate. For example, $11,000 of your taxable income is taxed at 10% and the next portion is taxed at 12% and so forth. This repeats until all of your taxable income is accounted for. This is what we call a progressive tax system. The marginal tax rate is going to increase as your taxable income increases. Wait, Sierra, what is a marginal tax rate? Is that different from a normal tax rate? So let me explain. There is a marginal tax rate and something called an effective tax rate. The marginal tax rate is what you see listed with the tax brackets. It's the highest tax rate that the last portion of your income is taxed at. So if you are single and make $20,000 in 2023, your marginal tax rate is 12%. An effective tax rate is the percentage of your taxable income that is paid to the IRS for that tax year. For example, if your tax liability was $2,180 and your total taxable income was $20,000, your effective tax rate would be 10.9%. This means you pay the IRS roughly 11 cents for each dollar you made that year. Okay, so how exactly do tax brackets work? Let's take a look at the 2023 tax bracket for a single filer. Most people will take a look at this tax bracket and think, okay, so I'm filing single, I make $70,000 a year. It looks like I'm in the 22% tax rate, so that means I owe $15,400. Yikes! Well, hold on now. Do you have to pay the IRS 22% of your entire income? No. A common misconception is that the higher your income, the higher your tax rate would be on all of your income. So how much are you actually paying in taxes, and what in the heck do all these tax rates mean? To determine how much you may owe, you must first understand what a standard deduction is. If you are unfamiliar with that term, it's a deduction given to anyone who files a tax return to lower your taxable income. The standard deduction will change based on your filing status. The IRS knows everyone has to make a living by buying groceries, etc., so they felt everyone deserved some type of deduction. All right, so let me lump all of this into an example. Let's say your filing status is single. We'll assume you make $70,000 per year. After deducting your standard deduction of $13,850 because you're filing single, your taxable income is $56,150. Okay, pretend you're walking up steps at your job, home, or while you are out and about. As you are walking up these steps, imagine each of them as a tax bracket. Each step has a portion of your income as well as a tax rate allocated to it. Step 1 has $11,000 of your income taxed at 10%. Step 2 has $33,725 of your income taxed at 12%. Step 3 has $50,650 of your income taxed at 22%, and so forth. Now, I'm going to give you this one rule. You can't move on to the next step until you have accounted for the dollar amount within the previous step. In this case, you can walk up steps 1, 2, and 3, because step 1 accounts for $11,000 of your income, which is taxed at 10%. Step 2 accounts for $33,725 of your income, taxed at 12%. And step 3 accounts for the remaining portion of your income of $11,425, which is taxed at 22%. Notice that the higher you get on the steps, the higher the last portion of your income will be taxed, not the entire income. Now, if you add all of those up, your total tax liability will be $7,660.50. In this example, your marginal tax rate will be 22% and your effective tax rate will be 13.6%, which is the percentage of your taxable income that is owed to Uncle Sam. I don't want to leave the video without showing the tax brackets for all filing statuses. Here they are. If we take a look at the 2023 tax brackets, we can see the tax rate can range from as low as 10% to as high as 37%. There's also a huge increase in the tax rate from 12% to 22%. There is a huge increase because most of the middle class falls within these tax brackets. You may also notice that if you file as head of household, married filing jointly, or a qualifying widow, your tax bracket increases. If you are married but file separately, the IRS will treat your tax brackets the same as filing single. So, does the IRS care about the taxpayers, and is our tax system unfair? It's debatable, but what I do know is the IRS allows W-2 earners to take advantage of tax deductions such as interest you pay on the mortgage, property taxes, etc. And as business owners, the IRS allows you to deduct home office expenses, travel expenses, and so much more. Those deductions allow you to decrease your taxable income, which in turn helps you pay less in taxes. I will admit, there are more deductions that can be taken as a business owner versus a W-2 worker. So if you want access to more deductions, start that business that you always wanted to start. So, is our tax system unfair? I plead the fifth. All right, so it's recap time. We've gone over what tax brackets are and how they work. I've gone over an example to show you how to utilize the tax bracket so that you can calculate what you may owe in taxes, and my opinion on whether the IRS cares about its taxpayers and if our tax system is unfair. Now that you know how our progressive tax system works, don't forget to drop your thoughts on our tax system in the comments below. Let me know if your thoughts changed after watching this video. Well, that's my time, y'all. As always, like, comment, and subscribe so that I know this video was helpful. My name is Sierra Stanberry, and I'll see you in the next video. Take care.